Welcome back, everybody, into the second marathon that we're going to do as a backtesting session on Bitcoin. If you missed the first one, if you missed the gold one, I will just quickly recap the rules since this is the first part. So, the rule is to take 20 trades. This is the sort of 20 trades exercise of Mark Douglas that he highlights in Trading in the Zone. So I'm going to take 20 trades and I'm going to evaluate at the end of the series of trades the profit, and most important than the profits that of course build confidence. What is most important for me is the flawless execution of trades. This is why I'm doing this exercise. This is what I can't do actually in the live trading session. So I'm going to take this. Every single trade will be taken as much as possible. This is the goal, with the mindset of taking one out of 20. It's not like this trade has to be a winning, this trade has to be a loser. We don't know what the market gives us. We don't need to know what is going to happen next in order to make money. So this exercise is to really try to understand if my trading strategy, my view of the markets has an actual edge, and then execute on it as much as possible, gain confidence, gain that careless mindset that is so crucial to become a professional trader. As you can see here, my rules usually are 15 pips stop loss, we take partial at 30 pips, and then we let the 20% running risk-free. Initially, the RTP is around 60 pips, but 3 to 1 would be 45 pips. But if we see that the price action is very impulsive, and for example, the 45 pips is here, we can say we move the stop loss, the take profit above, but we put the stop loss at 45. So in any case, even if we don't get to the take profit, we get stopped out with 45 pips of profit at least. That's the reason why. If instead we see that the 45 pips is here and we see price struggling, then we can take the 3 to 1 and close the trade. As well, if at the PPL we see another opportunity to enter and we are already in from below, we can take another re-entry, but we try to move the stop loss from here, from break even, to at least to edge somewhat the next trade. So if the trade gets stopped out immediately, at least we have 15 pips guaranteed from the previous trade to edge against this second entry. I hope it's clear. I also showed you the setup. My setup is usually this lower wick and then candle flipping bullish or bearish on the opposite side at a PPL, price sensitivity area, key level, etc. Then previous mistakes was especially on gold. I was entering right before. I think I fixed this mistake as well as this. I was not respecting my sessions times. I was not letting the winning trades run, and I was not exiting at break even with multiple confirmations. So if I enter here and price goes, but it's still like 20 pips, goes below, doesn't take me out, and then goes above again, but still struggles, there's no point for me to take the full stop loss, but I put the stop still break even again. Stop out at break even, no loss, but this price action is showing me that there's no momentum at this exact moment. So there's no reason to take the full stop loss. Then another mistake There you go. Entering ranging markets or first possible sign of trend. So this is why I try to use as much as possible a checklist, which I will show you. And of course, I have to enter every setup, every single setup. On last marathon, the current mistakes were I was still entering in ranging markets. I was forcing trades, especially at the first sign of counter trend. If I saw this, I would enter immediately. But the price maybe was still going up. Then I was not sticking to one main bias, which is I think the main mistake. And I was stopping and taking partials at 20 pips, which is not good as a risk to reward with 15 pips stop loss. So when I take full loss is 15 pips, when I take 20 pips, 80%, then the rest is break even. Overall, on the long term, doesn't make sense. And I was not sticking to my trading plan. So I hope, guys, the rules are clear. Let's jump into it. As always, we're going to start by choosing a random date between 2021, every single day, not the weekend. And let's see. Okay, 8th of June, 2021. 8th of June 2021, 10,000. We will use a fixed spread of now should be like this, 4 pips. 4 pips of spread. Let's hope it's right. And 200 pips of let's see. Let's hope it is right. No. It's too much. It's too much. I don't change it. So let me do it again. 400 pips. I'm closing it. Very important. Okay, that should be right. Yeah, 4 pips of spreads. We use the 1 minute and the 1 hour chart. Let's see if it's already loaded. Very good. And the 1 hour chart over here. So, very good. And here, that's very good. So, we're going to risk 2% every time. Like this. Like this. Like this. Okay. So since it is Bitcoin, we are not going to use the usual sessions. We're just going to go. And of course, start 10K. I will move it here and we start the analysis. So as you can see, these are my PPLs every 250. So 35 flat, 35 250, 35 500, 35 750, 36, and so on and so on. So if we analyze the chart over here, we can see that price is actually breaking below the previous lows on 33,750. We know that we are in a period of a big drop in Bitcoin, but as you can see, we still in May we reached 30K, and as well also we reached 29K. So since then we were in a sort of bullish run, bullish correction phase. Now we are making new lows. So it's very important to see if price is going to stay strongly below this price point, which is 33,750. Let's say, or 8 something here. Let's see. Okay. This level. So this one go away. This one go away. Okay. This one is the candles close. And now we are over here. So far on the intraday time frame, we are very bearish, as you can see. But as you can see also, we are facing a strong support. We still have the chance to revisit those previous lows, but still we have to be careful to see some reaction. So we are going to see the first price at the first candle, the first hours. As you can see, we're coming from a big drop. That came here, here, here. Oh, okay. Okay. It's fine. So we are very bearish. We are still have to let's see the first action, the first movement of the first hour. So we see immediately lower wick being created and then continuation up reaction at the PPL. So we have to formulate what is. For now, my main bias is bearish, but I have to be careful of this price action because too close strongly below will mean that we have the chance to go revisit those previous lows, but I have to see the price action of the first few hours to see where is price going right now. Okay. Good. So this is the price sensitivity area, which we marked up from the previous lows on the hourly time frame. So let's see if now we have signals of further rise. We can take also. We can also take have these price points as further confirmation of bullish price action. So far we are bouncing from the PSA and we are breaking below. Okay, strong move. Very nice candle, but close exactly at the PPL. The next one didn't make any lower wick, the top wick. This one might be a signal. Where are we? On the lower high time frame, where we can see that the first hour we had very strong rejection, liquidity grab and flipping bearish, still well below those previous candle bodies, and a nice range to fill, to possibly fill. Here, this as if we were to think about a checklist, this is a bearish trend. We had further confirmation here. We have a break below 2 PPLs. We are still, we got a break and weakness is the first sign, but we are overall in the bearish market. So I think we're going to take this sell. We're going to see this candle, how it played out. Top week. And then pushing bearish. 15 pips stop loss will be above the PPL, not much, must say, but we're going to see where the price is going. Okay. Okay, we got stopped out for our here. One L first loss. Okay. But I still believe it was a good idea due to the fact that we was in trend, we were breaking below, we had this candle set up. So no real worries. As you see, price now is ranging. Okay, there's no clear direction so far. You can see we didn't even break above the PPL, those previous highs. We are now in the other hourly candle, so we always check the high time frame. As you can see, how the candle closed weak bullish after flipping bearish, due to the fact that we are at a very important price sensitivity area on the high time frame. Let's see how it plays out. Okay. Just want to see. Yeah, we have the Asian session open. Okay. Is there a further confirmation down after multiple rejection, the price creating a lower high again? But if I want to take a sure trade, I have to take into consideration this strong PSA, this one here, and the next PPL. So no enter yet. Okay, as you can see, my choice this time was bad, because there's no signal here unless see this one made a it's a really small candle, so I will not consider it. If I did enter, the enter would have been here. I watched it, but to me, we were still in this high time frame range. Yes, we were still bearish. The main bias was bearish, but did we have enough juice to not to do this, but to close below. We didn't know, so that's why we waited. And here, yes, there was no real confirmation, because look at this candle, just melting without even making a top wick, as you can see. So no FOMO, nice rejection candle, and yes, nice move down again. Is breaking below the key levels without giving you a single chance to enter from my setup. As you can see, we are going to revisit this price sensitivity area, which I showed you before, but yes, it's very difficult on the lower time frame to catch it. Yes. Just an insight. Let's see this candle, how it played out. Okay. And closing bearish. So if when it closes bearish, I put 15 pips stop loss, I'm not getting stopped out. Okay. But anyway, we saw the move. Let's see if we have further confirmation of price moving down. Okay. This hourly candle was really strong bearish. But I think we don't have much more range to fill. Unless we're going to tap 30K. But really the entry would have been impulsively here without my setup. Here should have been an entry here, but it was not at the PPL. Let's see if we have further entries. If this one had a nice lower top wick, this could be a nice counter trend opportunity. So we are in the new hourly candle. We make a lower wick and then close bullish. On the hourly time frame, we made a lower wick, but we are playing counter trend, which is what I want to avoid as per rules. Too many forced trade. Is this a forced trade? So we have this huge rejection, this continuation. Yes, we have as a range, we have the revisit of these previous lows, or even a 50% correction of the move before going down. This is a nice setup with many bullish candles. So I think it's good, it's fine to take it. I risk my reward. We might even buy in the top. Exactly. So we have here, number one was a loss, number two was a loss. So number one was a loss, but it was okay. Number two was a loss, counter trend. Okay. Let's see if we have a signal to enter sells. This one looks nice, but the stop loss will be just above the PPI, not even above here. So unless I enter here, then I have the stop loss with the 4 pips is not good, because I would need price to go here, do expect price to still go and revisit here after making a double top week. Yeah, this is a nice in-trend setup. I'm going to take it. I take it because I still, the next two candles are just small, so it's not a guaranteed win. Okay, we are clearly, okay, missing something. Oh, we are just on the wrong part of the probabilities, so no worries. So this one was a loss in trend. It's fine. Only thing that I could have said is here. I would have got like 20 pips, so it's not still a loss. But you see why I told you that I really didn't like the entry, because the stop loss was right here, and with the spread got stopped out. Only with the spread, not because of price action. So the entry with 15 pips stop loss would not have been nice, because it was just above. So this, even if the price never closed above here, we still got stopped out. So if the price actually got to like 30 pips, 40 pips, which missed for like a few pips, 5 pips, 5 pips, this would have been a win, and this would have been just a rookie mistake, not putting the price, the stop loss at a price sensitivity above a price sensitivity area, above here instead of here. As you can see, why do I have to get stopped out here when there's no reason for? Of course, now I'm using a fixed 4 pips spread. And now this is not an entry because we are right at a PPL, of course. Now we see a double bottom being created. We see this nice candle. Makes sense, but it's still counter trend. Yes, we are in a double bottom. It's a very high risk, high reward entry. And so far, this might be much nicer. There is more weak. Still, for me, we're still too much into a range. Now we can see the price is breaking above. Now we might see some further confirmation of bullish perception if we see some nice candle with a wick to the PPL and then continuation up. So you see multiple bounces from here. This is another bounce from, that is a very small candle. But this might be also a signal because we are seeing price bouncing. Bouncing from here multiple times. A 15 pips stop loss will be well below the key level. We saw double bottom be created, a break and retest of the PSA. We are breaking above. The only thing is that we don't have a lot of volume, but let's see. We are playing the counter trend on the higher time frame though, so it's not just it's not just thing, but I will take the trade. I will take possibly a loss or win. It's too high risk. I don't want to risk 2% in these trades. I want to take them when they are much easier. So let's see the next candles. So nice. Thank you. This one might be much better. So this one would have been already almost 20 pips above. This one is actually a nice, much nicer candle, a much easier candle, with further confirmation of the price moving up. Do we have enough range? We have. We can take a buy. We can take a loss. We are buying the top. Okay, fourth is a loss. Yes. Which is in trend. It's not something I want to complain about. Yes, we are here. We are the PSA, but we are still showing a lot of strength. This one would have been just 20 pips, so not win yet. And actually, almost getting stopped out. But let's see, we have another bounce from the key level, from the PPL on the dot. We make a lower wick. We move up. Might this be a good? This is a very high risk, high reward. And it might probably work out because we are bouncing from this PSA, from these lows. The point is that the bearish, as you can see on the hourly, the bearish pressure is huge. As you can see, that was a right choice. It was too counter trend for me. I was just hoping that price would go up. Now, very, very strong bearish candle. Okay, when you see this candle, let's see if there's an impulsive candle, impulsive entry, and the price was below this previous PSA. We have 15 pips stop loss around here. Is not above this previous PSA, but we have plenty of range to go to revisit the previous lows. We are overall on a bearish trend side. Still 20 minutes. The point is that, look, 1, 2, 3 trades taken into this range. So I took the buys, I took the sell, I took the sell, took the buys. I'm trading it into a range. So that's against my plan. Why can I? Okay. I think it will be a mistake. Even if it goes here, it's still 20 pips. So it will be a mistake on my side to trade this. And it's showing me right, proving me right, that I don't have to trade into ranges. And as you can see, the price is in line. So I want to see clear trends to take further entries. So, okay. Let's see if we break below the previous PPL. We are bouncing from the PPL. Not my candle setup yet. I wanted a lower wick here. Yeah, no entries. No entry. Look at this range of this building. No reason to try to guess further. We already took 3 losses into the range. No reason to. Okay, now we are possibly breaking below. Let's see this next candle. It was very bullish. This is a nice possible entry, because even though it didn't close bearish, the last second was the liquidity grab that might be good for this entry. We are still in trend, and I think we're going to take the sell trade of the day. We made the lower wick, top wick, we're going below, so I'm going to take this last sell trade of the day around here, and let's see. Okay. Let's see here. What is the profit? PL. Okay, we are 20 pips in profit. Remember that we have 4 pips spread, so 30 pips will be around here. Okay, we get stopped out. It's a very nice. It was, I think, not a bad idea. It just didn't play out for as much as needed. So 3 is a loss. It was out of range plus momentum 25 pips, then reverse. So instinctively I would say, oh, like, I had to take this one, but we are still into a range. I want to see him breaking. If this was a liquidity grab, I want to see price breaking above the previous price sensitivity area. And it did. Nice indeed. And slide. Okay. So there's not much volume. If we took a entry here, would have been 30 here. 30 pips would have been okay, and then stopped out and break even. But it's fine. It was still into range. Only confirms was the very strong momentum of the bullish candles, very big kind of volume, and let's see what would have been the price, the buy. Here. Ooh, okay, so wait, the stop loss would have been much closer. As you can see, wow, much closer than expected. Yeah, then we get to 30 pips. We get to 30 pips, would have been out 80%. But look at this stop loss. The stop loss placed on the exactly on the PPL is not good. So I'm happy for me, unless in real life there would have been like 2 pips spread, but it's very easy for me to forget that these candles are moving. I think like this candle is the same as this one. Now, why did I take the sell before? As this one. This is 7 pips, but this is 15 pips. It's easy for me to forget about it. But anyway, I didn't take the trade. We are here. Okay, and we leave it here. So I'm going to save the simulation. We're going to close the first day with 5 nice losses. We're going 10% as a loss, of course. minus 9.59%. But we see that's why we're doing backtesting sessions to improve our execution. So see you guys next time. We're going to start on this point, which is this one, minus 9.49. See you guys next time.